Hey, this is Mike Mascia at Cadwalader. Thanks for tuning in to Fund Finance Friday Industry Conversations. The fund finance market's been working awfully hard. I hope as we get into summer, you're able to find a little bit of vacation for your calendar. My family got away to the beach. We went to Fripp Island, South Carolina last weekend, had a really good time. I thought I had a really good fish on for my kayak, and I was going to put the picture up to show everybody because I know you'd be impressed. But it ended up being a stingray, which of course impresses nobody. I'll take my daughters fishing this weekend, and hopefully we'll do a little better, and I'll show you the picture next week. We've got a good lineup for you today. Pramit Sheth, who's the managing director at Kroll Bond Rating Agency that covers funds finances with us, as is Laura Clark, who's the CEO of United Way Central Carolinas, which is the region that covers Charlotte. Good timing to have her with us and hear what the needs are in our community. Starting though, Tim Hicks has joined us to give an update of what Cadwalader's been seeing the last few weeks in the market. Tim, thanks for joining.
Yeah, thank you for having me.
You bet, you bet. Well, run us through, give us a little bit of color about what we've been seeing in the deals and in the market.
Yeah, trying to keep the list short to a few things. I think one of the major things that's happening right now is historically the second quarter, and June in particular, has been very busy with fund finance through the years. And so as we approach June, a number of those deals that closed in the last 2 or 3 years are coming up for renewal or for other credit modifications. And so the maintenance work associated with existing facilities has been extremely busy. Whether it be extending those deals or changing borrowing bases or doing other credit modifications that really don't make the headlines because they're not new deals that get a lot of interest, but equally important and allow existing facilities to kind of continue on and to stay in existence. The other thing that I would say is a lot of our lenders, they share their credit function with other product lines. And so as PPP and other loans are being made, these credit executives at the banks are being really pressed from multiple fronts to get deals approved. And so credit approvals have to be submitted early in order to get through to a desired closing timeline. So when you have a deal that has a change or someone wants to modify something that would be a credit action, it's very challenging to get that deal approved in a timely fashion because credit executives have a queue, and that really throws off the timing of how that queue operates, and it can be a bit of a challenge to get the deal closed if you need a credit modification late in the game. And the other thing I would say is, there's a number of deals right now that have multiple suitors and are being bid on by multiple lenders. So we really like to see those type of deals because that shows that fundraising is going well for a particular fund and a lot of interest in doing that deal. So more interest means more deals, and that shows that it's an encouraging market, and we view that as very positive.
And the new deal pipeline, does it still project favorably for the rest of the summer?
We really think so. I mean, the deals that we're seeing, the volume that we're seeing has been extremely high through the last several weeks, and we've not seen any dip that would lead us to believe that the summer is going to be a slow one. We're very encouraged by what we're seeing.
Yeah, that's great. That's great. Well, I know sports are starting to sneak back onto the calendar. Your boys playing baseball again?
Yeah, we started up this past weekend, which was great. It's a little bit interesting in North Carolina for youth athletics because they limit the fans to 0. So it's kind of like a glorified practice wearing your uniforms, but it was nice to be out there. I kind of felt like the Korean Baseball League with no one in the stands, but everyone was happy to actually get out of the house and do something.
Yeah, great. Well, I know your boys are good players like their pops.
I think they might be a little bit better than me at this stage. I get better the older I get.
And what about the smoker? You've been cooking any barbecue?
And I do it every time I can. I signed up for some auto ship a few months ago, and every other week I get about 60 or 70 pounds, and I'm running out of freezer space. So I'm trying to cook it. The other thing I realized was I'm in the process of moving, and I realized I have a problem because I have 3 smokers right now. So at any given time, I can put about 120 racks of ribs on and have a big party.
That's great. That's great. Look at this picture. David Kuhn from JP Morgan sent me this early in quarantine. This is a pig he was cooking. What do you think?
That's nice. See, what I would like to do is I'd like to challenge him. And then when a lot of people cook, that means a lot of people get to eat. So that's great.
Yeah, we'll have to have a Fun Finance barbecue at some point when the world reopens.
Love to do it.
Yeah, great. Thanks for joining, Tim.
Thank you.
Next, we have with us Pramit Sheth, who's a managing director at Kroll Bond Rating Agency. Pramit, thanks for joining us.
Thanks for having me, Mike.
You bet. You bet. How you holding up? You hanging in there?
Yeah, it's been an interesting 3 months, but we've been managing the new norm, and the team's been holding up pretty good, and I can't believe the time has gone by so quickly. And the new norm of having video conferences like we're doing right now, it's been interesting, but I have to say it's been somewhat seamless, and we've been able to still be efficient and productive, which has been nice.
Great. Do you live in the city, or are you in the burbs?
I do. I do live in the city, and I did leave about a month ago to get away for a little bit to a family member's house to have some more space.
Good, good. Well, glad you've been able to get out of the city a little bit. Great. Well, jumping in, tell us a little bit about the transactions that you guys are rating in the fund finance area.
Sure, Mike. Our methodology takes into account all types of debt that an investment fund may issue. In the fund finance space to date, we've provided ratings for various types, including but not limited to subscription lines, NAV-based lending, liquidity facilities, senior and preferreds on a 40 Act fund. Additionally, we've rated transactions that feed LP investments, and these can be done for individual funds as well as fund of funds like the KKR Rain and Blackstone Project Box transaction that we rated last year. Also, we've done stuff for balance sheet transactions where the collateral may be some combination of future management fees, carried interest, or GP co-invests.
Great. And are most of the deals you rate, are your ratings ongoing ratings or just upfront ratings?
Yeah, so we monitor all of our ratings on an ongoing basis and perform a full review at least once a year.
And how have the ongoing ratings held up from a downgrade perspective over the last 3 months?
That's a great question. To date, we haven't downgraded anything due to COVID. In fact, we had a 40 Act fund, which we rate that invest in MLP. So you can imagine March was a very concerning month for us. However, the manager did what they were supposed to do. They created liquidity to get themselves back in compliance with their asset coverage requirements, and we affirmed the ratings at the end of the month. Additionally, we have several of our transactions that have a decent amount of dry powder. So they're looking forward to taking advantage of the market displacement. At KBRA, we don't want to have a knee-jerk reaction and just downgrade an industry or a sector, and we don't think that the dust has quite yet settled. So, we've talked to all of our managers, and we continue to have ongoing dialogue to see how they're managing their portfolios, and with a focus, obviously, on the funds that have exposures to particularly hard-hit sectors, such as energy, transportation, or leisure. We did put out 2 publications during start of the pandemic. One that speaks to how funds are weathering the storm currently, especially the ones that do have dry powder. And we took a look at kind of how the 2006 to 2009 vintages compared to each other to see what we may see from the 2020 vintage. And for the other one, it was about private debt side and how kind of patient capital in the shadow banking world that we have now may allow for a different result than what we experienced in the global financial crisis.
Great. And what about transaction volumes? Have you seen an uptick or moderation since the disruption started?
We have seen the volume go up since we've been working from home. And by that, signed engagements have grown marginally, but continue to grow, which is great. And additionally, we've actually had some of the transactions that were put on pause kind of come back to life because of as the markets open up again.
Yeah. What about from a creativity and innovation perspective? Are you seeing any changes in the way deals are structured?
Mike, this space is full of intelligent people, so we're always seeing creativity and innovation. It's what makes our job challenging, but also interesting at the same time. Each of our transactions in one way can be unique, even though the concept and the investment strategy may be very similar.
Yeah. Any forecasts that you guys have for the latter half of the year that you could share with us?
Sure. I think that there's a lot of uncertainty for how the second half of 2020 is going to play out for folks, including for myself when I feel comfortable going to get a haircut again. But in the fund space, I do think that what we'll see is continued close dialogues with existing portfolio companies, as well as managers deciding which companies they want to hold on to, and the pursuit of new opportunities with the dry powder that's there. The industry as a whole, believe, is well positioned due to the amount of dry powder in the market, which is driven by the strong fundraising that we've seen and have AUM increasing over the last several years, and also the shift that we've seen of public market to private market. I think folks are looking to put money to work in either new investments or to provide liquidity for their current investments. And I think also a bounce back of the public market could offer some of the opportunities for exits.
Yeah, sounds good. Well, listen, really appreciate you joining us. Thanks for making time.
Thanks for having me. Appreciate it.
So with all the challenges in our community right now, we wanted to take a moment and visit with Laura Clark, who's the CEO of the United Way of Central Carolinas. Laura, I can't imagine anybody that's probably had a busier 3 weeks than you have. Thanks for making time to visit with us for a bit today.
Thank you. Happy to be here.
So I can imagine there are a whole host of community needs right now with all that's going on, but can you kind of give us some color into where you think the community needs are the greatest?
Absolutely. I will say I've been doing this work for a long time, and I've never seen community needs like this. I think it even pales in comparison to what we saw after the recession. And part of that is because this isn't just about giving money to the nonprofits, but we really have to help them figure out how to do their business differently too, right? They're all facing the same challenges we are around social distancing and trying to keep their staff healthy. And so it isn't just about winding them up with more resources, but actually supporting their operations. As for the specific needs in the community, the primary needs are still, 2 or 3 months in, really around basic needs in our community. So the need for food is absolutely tremendous. Shelter and housing and helping people maintain housing when they aren't able to pay rent and utilities. And then emergency financial assistance have been the biggest needs so far, although I'd say they're closely followed by health and mental health concerns. The mental health concerns are growing both for clients of organizations and the staff that are providing services. And I will say more recently, there's a growing concern around child welfare. So children are most often identified as potentially being victims of child abuse and neglect by staff in schools or after school programs, and they aren't in those programs right now. They aren't in places where they're being seen. And so we're seeing the numbers of reported abuse and neglect go down. Normally we would be celebrating that, but right now we think that's actually not a good sign. And the COVID-19 Response Fund is taking a look at that and trying to figure out, okay, what as a community might we need to do to respond to that while we're continuing to support the basic needs in the community.
Yeah, I want to ask you about the COVID fund. Charlotte was one of the very first cities when the COVID crisis first commenced to conceptualize and actualize a response fund. Tell us a little bit about how the COVID fund came to be and how the funds are being deployed.
Yeah, I'm really proud of the fact that Charlotte once again really stood up quickly and said, we recognize that there's a crisis coming and we need to be prepared. I think a lot of other cities certainly started funds, but maybe waited a little bit longer. And I think we were at the forefront of that. The Foundation for the Carolinas and United Way agreed to jointly do this together so that we could have one fund, one focus, and very quickly were surrounded by support in the community and had multiple 7-figure gifts made to the fund in those initial weeks so that we had the resources to deploy. The way we've stood the fund up is so that we can respond quickly in the community. Both United Way and the foundation are very deliberate grant makers. We take a lot of time with our grant making. We have a very thorough review process, but this isn't the time in the middle of a crisis when the needs are so great to take 6 months to make decisions, right? And so we've really pushed ourselves and our volunteers that are overseeing this to review the grants quickly and get the money out into the community. So we've had to date 3 rounds of funding. Well, we're in the middle of the third round of funding. We've granted out about 10.5 million and have raised about 19.5 million.
Yeah, that's great. That's just terrific work, especially in such short time. How about the balancing, though, of the immediate needs around social justice and equality with the immediate needs around the virus? How are you doing the best you can to balance the two?
Mm-hmm. Well, the reality of these two things are not unrelated. What we're seeing with COVID and the disproportionate impact on our Black and brown neighbors, not just from a health perspective, but from an economic perspective, because they're more likely to be unemployed, they're more likely to be on the front lines, they're more likely to be the ones in those lower wage jobs that are still having to work. So they really are being hit on all sides from it. That is a perfect example of the reasons we're seeing the social unrest right now. That the economic immobility that minorities have faced in this community for quite literally hundreds of years now shows up very viscerally in things like a pandemic, where they're going to be hit harder, either because they don't have access to health care, they have underlying health conditions that make the disease much more damaging, or because of these economic things that I mentioned. So I think first we have to recognize that these issues are part and parcel of each other. Our funding, I think, has done a good job through the COVID fund of reaching populations and neighborhoods that are getting to those marginalized communities in ways that maybe we haven't before. We've done an intentional job of funding both institutional and grassroots partners. You know, sometimes our institutional organizations that are the most well-known and beloved organizations don't have the relationships with some of these communities, or don't have access into some of the neighborhoods. Sometimes these small grassroots organizations that may not be known to the United Way or the Foundation have been working in these communities for years. And so we've tried really hard to source and to resource those organizations. So I think we've done that, but I think our opportunity here is to take the crisis that is the pandemic and use it as a pivoting point for this community to really focus on the root causes of racial inequity and how we got here. And to understand that there is no quick fix, there is no one program. We've got to peel back the layers of this onion and really get down to the why of how we got here.
Yeah. So upward mobility has been a strategic priority of the United Way for the last several years. And I do think that seems reasonably well aligned with attacking social justice challenges. What do you think? I mean, do you see any adjustment to your strategic priorities?
Not overall, because I think economic mobility is, again, at the root of this is social equality and racial equality and equity. That said, economic mobility is a continuum, and you have to meet people where they are. And if they don't have food and they don't have a job and they don't have a roof over their head, then you really can't talk about any of these other things. And so United Way really does view it as a continuum. And while I don't see our priorities changing significantly in the near term, I do think this coming funding cycle, we're going to have to take a hard look at the safety net and make sure that we're putting enough resources to that right now. But in addition to that, we launched 2 initiatives after the 2016 unrest, Unite Charlotte and United Neighborhoods, that have continued. And in fact, Unite Charlotte will be expanded this year. And that effort is specifically to fund grassroots organizations that are led by minorities that maybe wouldn't have had access to United Way under our traditional funding model, and helping them come into the fold and walking with them and doing capacity building for their organizations is a priority of ours as well, because we think that's an important part of economic mobility, is bringing other kinds of leaders to the table.
Yeah, absolutely. Absolutely. So if people want to contribute, how can they go about it?
So if you want to contribute to either the COVID Fund or to United Way, you can go to our website, www.uwcentralcarolinas.org. You can also go to helpsharmec.org for the COVID Fund. You know, we are trying to walk that balance right now, because we know these needs are going to be ongoing, of supporting the crisis moment, but understanding that these organizations are going to need support beyond that. And that's really where United Way comes in. We're always there. We always help provide operating support for our nonprofits. And we know that almost all of them are facing really devastating revenue losses because of the pandemic and the associated recession. And anything that we can do to shore them up over this next year or two is going to be really critical, because they're the ones we're relying on right now. They're the ones we're all counting on to be out there serving the most in need.
Yeah. Listen, I really appreciate and thank you and your team for all the great work you're doing in our community. You can count on Cadwalader to continue to support you guys, and thanks for joining us.
Thank you so much. We appreciate all you do for us.
So thanks for watching Fund Finance Friday Industry Conversations. We're releasing this edition on June 19th. The firm is closing for a half day today to recognize and commemorate Juneteenth. Also Sunday, Father's Day. Hope all of the fathers have a great holiday, and happy Father's Day to my dad. If you have feedback for us on how we can make industry conversations more productive for you, we would welcome it. Thanks.
The material and information contained in the podcast is for general informational purposes only. Any use of the audio within this podcast without the express consent of Cadwalader is prohibited. Quotes from this podcast may not be used without the express permission of the speaker.